Hey gang, it's Jeff, and welcome to our Tuesday night live stream. Joining me tonight is our producer Jill, and she will be going through the questions for us, and also the questions, both the questions that have been written in or emailed in, and those that are coming to us live. Just a couple of housekeeping points. The standard disclaimer required for the state of New York. This live stream is for information purposes only, and you should not use it to make decisions about your finances. If you do need information for a specific situation, then consult a professional who is familiar with your individual situation. The information we give on the live stream is directional, but it will apply to a lot of people, but not necessarily apply to everybody. So keep that in mind as we go through the information here on the live stream. All right, I think that we have just covered off the bare minimum we need to cover off in terms of the disclaimer. So why don't we pass it over to you, Jill, to get us started with the questions.
All right, great. So as always, we do bring in questions live, and we bring in questions that were emailed. So for tonight's show, there will be some from last week that we weren't able to get to, as well as any questions that were emailed in on Social Security before 4 p.m. Eastern time, so that we had ample time to prepare to come on the show. Also, I do encourage you, please do put the questions into the chat because we will get to those live. All right, so we are going to start with an emailed question. I don't see live questions coming in as of yet. We're going to start with a question from Greg. He's asking, I'm 68 and 4 months old. I had planned to delay Social Security until age 70, but my consulting income has changed and I'm considering filing sooner. Is there a tool that can help me analyze the financial impact of claiming now versus waiting?
Yeah, sure. There are a couple of different tools. But the first thing that you need to think about, Greg, is what do you want out of your Social Security? There's a common misconception when it comes to Social Security, and that is it's all about getting the maximum amount of benefit at a particular point in time. So you look at where you are today and say, my projected lifespan is going to be 25, 35 years, whatever it is. What is the best time for me to claim Social Security based on that information? But the reality is there are at least four different decisions when it comes to claiming. The first is the decision about, do you just need the money? And believe it or not, this is a very big one for people. 40% would be my estimate, because 40% of the people who take Social Security retire on Social Security alone. 40% of the people who claim Social Security would more or less do it because they just need the money. Now, some people, because they know that this is their only income, will work longer to increase the size of it, but it's a very large percentage of the population. The second is if you're trying to manage to a specific situation. So let's say you wanted to go on that cruise that you've never been on before, the one that you've been waiting your entire life for 40 years to go on to. Well, you might want to claim earlier because you get more cash flow, noting that your payments will be more. You'll get more payments, but you'll get less of them. Or you want to manage a different type of risk, long-term care in late retirement. So maybe you want to claim later. Or you just want to maximize the total number of payments, so the total amount that you receive, old school break-even style. So at what age do I claim to break even? And so if one of those are yours, well, then you would have a different decision based on what that is. The first place to start is SSA.gov, and you can see the Social Security Retirement Estimator there. It gives you a snapshot of what your Social Security benefit looks like with the information that they have. Now, the SSA isn't up to date with information. In fact, you could argue that they're, depending on the time of year, anywhere from 12 to 18 months behind. Sometimes there's as little as 6, but basically they have to process your paychecks and your earnings information, and that's incorporated into the size of your Social Security payment. So it's an estimate when you go to SSA.gov. The other option is that you could use a financial planning software. We have an affiliate, Bolden Personal Financial Planning Software, and they do a wonderful job. If you have an interest in Bolden, just go to go.bolden.com/Schmidt, and you can get 2 weeks free of their full-featured software. If neither one of those are of interest to you, you can go to Open Social Security. It's one of the best free calculators out there, and just drop Open Social Security into your search engine, and the data will come back. Just click on the link and plug in different scenarios. It's a good tool. But between all of that, you should have what you need to get a rough estimate. And nothing is going to be precise, because when you're dealing with the point right before you claim Social Security, there's still a few things that need to be nailed down, namely your historical information your historical earnings information that needs to go into the Social Security Administration. But it'll be pretty close. And so those are places to start. If that doesn't work for you, send me another email at livestream@HillArySchmidt.com, and I'll give you other direction. But those are all reasonable places to start.
All right, great. Lots of options there. All right, so Joe is asking a question live. Can you explain, oops, the screen just moved on me. Can you explain how having your birthday the first of the month affects claiming Social Security?
Sure. Well, the first of the month is a problem for a lot of government-related payments. Medicare, for example, if your birthday is the first of the month, then the government basically says that, especially during your initial enrollment period, that they treat the first of the month as the month before. And the reason for this is because they just don't have time. So when you are claiming Social Security, if you are at the first of the month, and because everything is done in arrears, you don't have time to execute that request. So everything is moved back a day. And so when you're thinking about a first of the month birthday, understand that what you're really trying to manage is the fact that the SSA will get that information and cannot react instantly. And the same thing with Medicare, by the way. But knowing this in advance means that you can just manage it by filing a little bit earlier.
All right, good. So we're getting quite a few questions in the chat box. So let's keep going. John Roberts, USA, is asking, I'm retired and have been on Social Security for 3 years. I may have a chance to get a job. What do I tell my employer? Will Social Security taxes be taken out? Can I get them back?
So there are 2 different questions here. One is a question about the fact that you are claiming Social Security and working at the same time. And the other is about taxes on Social Security. So I don't think you really need to have a discussion with your employer about this particular issue. This is an issue between you and the Social Security Administration. And so the employer won't and actually can't make this decision for you. That's not their purview. But what you do need to understand are the earnings limits. Social Security has earnings limits, just like whether you're working or not. Once you start claiming Social Security, you can only earn a certain amount of money before you have to give part of your earnings back. And so because of that, you have to let the SSA know that you're working if you're going to exceed the thresholds. And then when that happens, you basically, from that point forward, have them freeze or reduce your Social Security payments so that you don't actually owe money to the SSA. for every dollar you go past the threshold, you end up owing the SSA a certain amount of money. For example, if this is 2026, if you're not in your full retirement age year, if you earn over $24,480 in a non-full retirement age year, you have to give $1 back for every two that you earn. Now, your first year of Social Security, and you're beyond that based on what you've just said, they break this down to a monthly test. But after the first year, it's an annual test. So let them know, let the SSA know that you are going back to work, and that they need to withhold a certain sum of money from your Social Security payment, so you just don't get surprised. The worst thing that can happen is that someone doesn't know that this is coming, and this happens all of the time, where a Social Security recipient thinks they've won the lottery. I've got both my Social Security payment and this new job, so therefore I'm going to go buy a new car. It's a classic example, and it actually is probably the single most common occurrence for people who don't understand that you can't claim both, at least beyond a certain income level. And so let the SSA know. Your employer, they don't need to know. I suppose you can tell them if you want, but it really isn't up to them to police this. In terms of taxes on Social Security, there are certain amounts of Social Security income that you eventually could get taxed. Up to 85% of your Social Security payment could get taxed. It really depends on something called combined income, and the more you earn, the more likely it is your Social Security payment is going to be taxed. The amount is it's not a complicated calculation, but it's one where you add your adjusted gross income, half your Social Security payment, and effectively your tax-free income together. That combination is what's measured against different thresholds, but it's important to note here that taxes on Social Security is not the tax on Social Security. So when someone hears about 85% of their Social Security payment being taxed, that just means that 85% goes to ordinary income and becomes taxable. You're not paying an 85% tax. That's the maximum your Social Security payment the maximum amount of your Social Security payment that can be taxed.
All right, we're going to go to an emailed in question from Roger. He's asking if the lower earner claimed her own Social Security early at 63 and is receiving a reduced benefit, and then at 67, her full retirement age, she becomes eligible for a spousal benefit because her husband files. How is the spousal top-off calculated? Since the spousal benefit is based on full retirement age amounts, where do we find her full retirement age benefit if she already claimed early and the Social Security website only shows her reduced payment?
Yep. So I've put a link in the description of this live stream. You can find it right now. And it says something like spousal calculation. In fact, let me just take a look here and I'll tell you exactly what it says. It says dual income households. So that's the link that you go to. But and that'll give you a more robust explanation about what I'm going to tell you. Basically, there's something called dual entitlement. And dual entitlement means that oftentimes it's not a perfect situation where you have one partner who works full time or worked their entire lives and the other was a spouse and never earned an income. And in fact, it's rare that happens in this day and age. And so the spouse is often entitled to his or her own income. And when you're entitled to your own Social Security payment, your own Social Security income, your own Social Security payment, and the spousal benefit, that's called dual entitlement. And when you file for one, if you qualify for both, then you have basically you're deemed to have filed for both. It's called deemed filing. It only happens when you qualify for two different payments. So if in this situation your partner is not taking Social Security until later, so you file for your own smaller benefit, and then when your partner qualifies or files for his or her own benefit, that's when it opens up both benefits, at which point you will have deemed to have filed for the higher payment. But since you've locked in a portion of the higher payment early, that portion goes away. And without getting really complicated, because it's a reasonably complex calculation, if you assume, for example, that you had a payment, a spousal pay, or your own payment, which would have been, say, $1,000 at your full retirement age, but it's $700 at age 62, that means that you've permanently locked in $300 less for a portion of the bigger payment. And so when it comes time for the spousal benefit, it will be roughly $300 less at age 67. And that is just back of the envelope, full disclaimer, because the calculation is reasonably complex. But if you go into the description, there is a link to a video which will walk you through it step by step, and it'll become crystal clear after you go to that video.
All right, great. So Cad Mango is saying, thanks for the live stream. Cad Mango, thank you for being here. And here's the question that's being asked. Self-employed, considering starting Social Security on June 1st. I will be 65 in 6 months so that I can cut my workload. My Social Security will be $3,700. My wife will be 64 in 3 months at that time. What percent will she get at that time?
So your wife's Social Security payment for the spousal benefit is not based on your payment when you claim. It's based on your full retirement age payment. So whether you claim early or you claim late, it doesn't matter. Your wife gets the spousal benefit based on her age when she files. And so at age 64, for example, she will qualify for, of a 50% payment, she'll qualify for 37.5% of your full retirement age benefit. It doesn't matter if you claim early or not, she still gets she can get up to 50%, even if you claim at age 62, as long as she waits until her full retirement age. But, and the caveat to this is super important here for planning purposes. She cannot file for the spousal benefit until you file for the primary benefit. So she's locked out of the spousal benefit until you claim first. So even if she reaches full retirement age, and that's the maximum she can receive, that's at full retirement age, she can get up to 50, she can get 50%, but she can't go any higher than 50%. If you have not filed, she's going to sit at 50%. So you have to file first. Her 50% or haircut on the 50% is based entirely upon the age in which she claims.
Okay, so let's go to a emailed question from Charles. He's asking, how do I apply for divorce spousal benefits based on my ex-spouse's record? Can I complete the entire process online, or do I need to speak with Social Security directly?
Yeah, so you can file online. I think a lot of people say that this is much more difficult for them, and the reason is simply because there's a lot more to a divorced spouse benefit than just a spouse benefit. Number one, there's often a communication issue between the spouse and the original primary insured, the divorced spouse, and the primary earner. They may not know what their benefit is. There's a lot. There are a few more things that you have to deal with, and so you can do it online. But I would also be prepared to actually have to go and at least have a conversation with someone at the SSA. And it doesn't mean that you won't get it. You have the same rights whether you file online or you do it in person. But a lot of times there's just information that you need to give to them because you are divorced that you wouldn't have to give if you were married. But I would plan on going in and speaking with them, get an appointment, talk to them.
All right, great. So now we're going to do a live question from G Machine Joe.
Know that.
And so the question is the dollar amount at the different ages you see on the Social Security statement the amount of Social Security you can expect to receive when you sign up for Social Security benefits? If so, why are there benefit estimators and calculators on their site?
Yep. So the answer is it's an estimate. And the reason it's an estimate is because they don't know what inflation is going to look like when you actually claim. And they also don't know if you're going to continue to earn like you're earning now. When you file for Social Security, the SSA takes your best 35 years of earnings. They index those earnings into today's dollars, and they do something with it. They feed it into a formula. But if you continue to earn between now and the time you actually file, some of the early earning years roll off. If you were making in today's dollars, say $20,000 a year, the classic example that I use all the time is, let's say you're an auto mechanic and you were making $20,000 a year right out of high school, and then you became a pro auto mechanic, and you actually went to go work for like the Ferrari racing team, I don't know, and you're making 10 times that, you still have to get 35 years in. And so as you get older, those years start to roll off and your Social Security payment starts to creep up. So number one, they make the assumption that your future earnings look like they do today. So that's already built into the Social Security payment, but they could be higher or they could be lower in reality. The second thing is that they don't know what the cost of living adjustment is going to be. So they can estimate what your payment would look like today if your earnings continued on as is. But if we have a situation like 2022 where you have 8% plus inflation, payment's going to be a lot higher. If you have a situation like 2020, I believe it was, where it was 1.2, maybe it was 1.6%, Social Security payment could be lower. So they don't even try to figure out what the COLA adjustment's going to be. They just assume that everything is as it is today when you file for Social Security. So the only thing they carry forward is the earnings that you have right now into the future. And so what that means basically is if you continue to earn what you're earning now and you had some low earnings years in the beginning, your payment will probably go up.
All right, so tonight's live stream is strictly on Social Security. We will be resuming Medicare next week. But Jeff, I believe this is mostly Social Security. It's really dealing with Social Security deducting Medicare payment. Can I bring you that question?
Sure, go ahead.
Okay, Kathy Salisbury has asked, I applied to receive Social Security benefits beginning in April. In the meantime, I've been paying for Medicare myself directly. My most recent bill for Medicare is for March through May. Will Social Security deduct Medicare payments beginning in April? I don't want to overpay or underpay. My first payment won't arrive until late May. I don't want any surprises.
I think you can assume they won't. They should, but I think you can assume that they won't, because the SSA, it's a wonderful organization, wonderful people. They're overworked and their technology it's getting better, but it's still in many cases 20 years behind. So I would contact them and ask them to make sure that they start taking it out of your Social Security payment as soon as you qualify.
Okay, great. And that answered Martin Flegelman's question as well, had the same question as Kathy. So thank you for that question, Kathy, and glad we were able to answer that. Marvin. All right, let's go to Patricia. She's asking, I stopped working at 55, so I will have no income other than a pension until I start collecting Social Security. How much will my current estimates decrease because of my lack of earnings? I stopped working at 55. Oh, it repeated.
Yeah. So I love this question because the question, actually have a video on this very question. It's almost like you watch the video and you actually wanted to come and asked me to point you to the video, but and I'll point you to the video in a moment. But the SSA, sorry, your payment with the Social Security Administration is your best 35 years. And in the video that I put out, I said, but what happens if you don't work 35 years? How much does your payment decrease? Let's say that you work 30 years. And it had far less of an impact, 30 years instead of 35, than whether you claim early, at full retirement age, or late. And so if you claim at 55, then it will certainly affect it, but it won't affect it the way waiting or claiming early would affect it. The video itself, and I'm just going to pull this up here, excuse the reflection, but I just have to be able to actually get to this for you. The video itself is the number one, nope, that's not it. Bear with me here. The number one factor that lowers your Social Security payment. And that was published in mid-January, has 143,000 views, and so it's quite popular. But check it out, it shows me going like this, and the payment, and it says less every month. And so with that, you should be able to look specifically at your situation because it addresses your situation exactly.
All right, great. David Green says he's enjoying watching this channel. It's actually one of his favorites. Very interesting. Thank you, David, for that really great feedback. We appreciate it.
Great.
All right, JSNK4TN is asking, how is my Social Security calculated if I'm divorced, retired, and over retirement age? My ex-spouse is still working and not at or over retirement age.
Okay, so is this a spousal benefit question?
Well, it's how is my Social Security calculated if I'm divorced, retired, and over, but this ex-spouse, yeah, it sounds like is still working and not at or over retirement age.
So if it's your own payment, then your divorced spouse won't have anything to do with it. If it's the spousal benefit or the divorced spouse benefit, it would be based on your ex-spouse's full retirement age benefit. And the spousal benefit calculation works the same way. It will be based on your age when you file for the spousal benefit. And the closer you get to full retirement age, the larger your payment becomes. At full retirement age, it can't grow anymore. But the same caveat that applied to a spouse also applies to a divorced spouse. And that is they need to file first unless you've been divorced for 2 years or longer. You've been divorced for over 2 years, then they don't need to file first.
Okay. Just now is asking, I own a small business, LLC, and take a salary and draw from the profits, and I retire in 2 years at age 67. Is it mandatory that I currently have to pay into Social Security?
Yes.
Yes.
I mean, I don't. There isn't a different answer than that. What you pay in will be dependent on how much your business earns after expenses, but you can't not pay into Social Security. There are people that do things that they shouldn't do, cash, etc., but that's beyond the scope of this channel. So if you're earning an income through your business, you'll have to pay into Social Security.
All right. Jay Moore is asking, what are your thoughts on the reduction coming for Social Security payout? Is that still the case if you wait until 70? Should you retire at an earlier age? Are you penalized for not working until you retire?
Sorry, would you repeat that question again, Jay?
Yeah. The question is, what are your thoughts on the reduction coming for Social Security payout? Is that still the case if you wait until 70? Should you retire at an earlier age? are you penalized for not working until you retire?
Okay, so I believe the question is the question about what happens in 2033, 2034 when the Social Security Trust is targeted to run out of funds. I believe that's what you're asking. And if it's not, then just, it sounds like that was in the chat question. So just let us know in the chat. But there's a lot of, like anything out there, there's a lot of emotion around data, and data can be used to serve you, or it can be used to create animosity. The 2033, 2034 cliff is they're assuming that the government doesn't do anything to fix Social Security. In 1983, there was a very similar cliff. And in fact, major amendments to the Social Securities Act have happened throughout time. There was one in 1983 to fix this very problem, but there have been something like a dozen major amendments and many, many more small ones. And they always deal with a big issue. The way that they dealt with it in 1983 is, in my opinion, and it's a really educated opinion, how they probably will deal with it in 2033 or 2034. And that is, you have a whole group of people approaching Social Security claiming age. And so what do you do if the trust has no money or it's running close to zero? Well, do you tell everybody we're cutting benefits to money in, money out? Basically, taxes that are paid in are going to be used to pay out to recipients and nothing more. So everybody gets 78%. I think that's the number that's being kicked around currently. Well, you'd have a whole host of people calling up their kids saying, "Hey, Junior, I'm moving home." It would just, you can imagine with 57 million people receiving Social Security, that conversation would go on 20 million times anyway. It would be a huge burden on people. And so in 1983, the SSA said, "Here's what we're going to do." There's an amendment, and it wasn't the SSA, to be fair, it was politicians, but we can't let that happen because it would be catastrophic for the country. And plus, we also have a whole 30 or 40 million people at the time, probably it was that number, maybe it was a little less, maybe it was 25 million, that vote and will get voted out of office. So let's amend it and fix the problem. And how do they fix the problem? Well, they raise the tax on Social Security from 5.4 to 6.2% for the employee and the employer. That fixed the cash flow problem. And by the way, the trust was 2 months from running out of funds when this all happened. And they also extended the full retirement age. Now, what do you do in 1983 if you've got someone who is 61 and about ready to claim Social Security? Or let's use a better example, because they were 65 was full retirement age back then. What do you do when they're 64 and 10 months and you raise full retirement age? Do you yank the rug out from underneath them and say, "Sorry, but you need to wait 2 years"? No. What you do is you set up, you fix the problem immediately with an increase in tax, the 5.4 to 6.2%, and you fix the broader problem by gradually raising full retirement age, but you do it 20 years in the future. So full retirement age didn't start moving out until the year 2000. It moved out very slowly from 65 to 67. And so that basically means that anybody who was close to retirement age in 1983 got a pass. And it really became the next generation's problem, to be completely candid. And I have a very strong feeling that would be the way that this is going to move in some form or another. I think it's highly unlikely that people are just going to have their Social Security payment cut in 2033. I can't predict the future, but I'd say with a very educated lens on this, that it would be really hard for politicians to do it, especially since there are a lot of government programs that are unpopular. The single most popular government program, one of two, is Social Security. The other one's Medicare. And if you touch a really popular government program, you're not going to have a job if you're a politician, if your name is attached to that. So that's a 5-minute answer to say, take a deep breath and just watch what's happening. But also, this is one of those kick the can down the road type of situations. It happened in 1983 because for the government, between 2026 and 2033, that is a long time. That's a couple of administrations. And so I suspect it's going to come right up to 2033, 2034 before it actually gets fixed. But my strong view on this is that it will get fixed, and you won't have to worry about this as a variable when you're thinking about your Social Security.
All right, great. We're going to take a question from email from Pavo. When are my 2025 earnings reflected in my Social Security record and benefit calculation? Is it after I file my 2025 tax return, or does Social Security update my record on a fixed schedule regardless of when I file?
Yep. So your tax return is less likely to be the driver as your employer. And when your employer reports the information to the Social Security Administration. So when you get your W-2, that is the signal to the SSA that there's information they can do something with. And so basically what it means is there's going to be a lag between the time between the time 2025 is up and that information hits your estimates in your Social Security. You just have to assume that that's going to be an issue. But it's also one that fixes itself over a period of time, 6 months, a year maybe, but it's not instant. Unfortunately, there's not an instant change to your payment. It's not like the cost of living adjustment where everybody gets 2.6% or everybody gets 1.3% or whatever the number is on January 1st. And even that is, they can't do that instantly because that number is announced in October. And the reason it's announced in October is because they need time to make the adjustments with the systems. So I think you can expect a 6-month lag, at least in that information.
Okay, Jason is asking, I received a 1099 NEC for $5,000 more than I actually earned. Should I report this higher income on my 1040, even though I will pay more taxes now, since this will boost my Social Security payment down the road?
Oh, I wouldn't do that. So sorry. If I understand, first of all, there are all sorts of issues with this. So the first is that you're paying taxes on money you haven't earned, and you haven't received. No matter how much you receive in additional Social Security payment, you still have to pay taxes on that $5,000, and so you don't want to do that. And number two, it's incorrectly reported anyway, and so you need to deal with this. Talk to the person or the company that sent you the 1099, get an adjusted 1099, and if you've already filed your taxes, then you'll have to file an amended return. But there isn't really a scenario where you've earned something or you haven't earned something and that they give you a 1099 saying that you did. That benefits them as a tax deduction, but it certainly doesn't benefit you. So I would definitely go back to the source and have them give you a corrected 1099.
All right, Keith has a question. I'm eligible for Social Security in April. I understand I can't make more than 24,000 and some change. Social Security said this is a grace period year, and after I start Social Security in May, I can't make more than 2,040 a month. Then in 2027, I can make 24,480 in the year. Oh, I think that's a comment. I
Yep.
don't believe that.
So I'll verify that. Yes, that's all true. A grace period year is your first year. That means that your Social Security payment is, or your Social Security thresholds, your earnings limits are on a monthly basis your first year and your first year only when you claim Social Security. So if you start claiming Social Security after April, you retire in April, between May and December, it's measured monthly, not annually, and it's measured at 2,040 per month. And so anything in excess of that in any given month, you have to give $1 back for every $2 over $2,040 per month.
All right. Tom is asking, about a year ago, someone hacked my Social Security account and fraudulently applied for my retirement benefits. One payment was deposited into their bank account before I caught it. I immediately went to the Social Security office and had the claim canceled. Will this fraudulent claim negatively affect my benefit amount or record when I legitimately apply in the future?
This is rare. For those of you that are worried about this, and I'm glad this question came through. I read it earlier today. It was an email question. I spent a lot of time on this one because I could just tell you, don't worry about it. But you always want to have an answer more than the SSA has got your back, so to speak. But before we even get into this is extremely rare. What happens most of the time when someone uses your Social Security number, it's not there to claim your Social Security payment, it's to get employment. And what ends up happening is 5, 10, 20, 30 years in the future, whoever used your Social Security number to gain employment has created a situation on your earnings record where you have too much earnings on your record. And it's a pretty easy thing to flag in hindsight, so it creates an issue when you file. And so the fact that, so when that happens, you actually have to have a discussion with the SSA, and this is oftentimes when things get delayed because of dealing with someone who got a hold of your Social Security number and worked on your Social Security number. The actual act of filing a fraudulent Social Security claim is rare. But if the claim, three things need to happen. First is that the claim had to be formally withdrawn. So the claim for Social Security, it sounds like, was formally withdrawn. The filing date needs to have been removed, and you can see all of this on the SSA, your My Social Security website. And the record shows that you're not currently receiving benefits. If those three things are intact, then you're good. If they're not, then you need to make sure that those three, whatever is not dealt with there, needs to be dealt with. But there isn't an instance where, because someone else fraudulently claimed your Social Security payment, you lose. What ends up happening is the government just eats it and it gets adjusted, but it might require a bit of work on your time, on your part.
All right. I believe, Gary, your question, I believe, is in regards to Medicare, but it's Social Security and IRMA. Jeff, do we want to hold that for next week?
Well, you can give it to me. I'll answer it.
Let us know. Okay. Is there any risk that Social Security would not grant exemption of IRMA for retirement as the qualifying reason for the request? I could move to my wife's insurance if there's a risk.
I mean, it is one of the qualifiers. This is a funny thing because each case is they lay out the SSA lays out what the exceptions are, and any instance where basically your income goes down because, say, you're retired, it is considered a qualifying event. But someone reviews it. You have a human being who actually looks at it and makes the decision. I would say that you're probably fine, but I don't want to hand down heart say it's a guarantee, because you have to fill out a form and submit the form, and someone reviews that form. But it's unlikely that you're going to have an issue if your income is down.
All right. Fast Eddie is asking.
Love that name. Fast.
Fast Eddie 336 is asking, I hear a lot of people getting overpaid and then later Social Security wants their money back. How do you double check to make sure you're not receiving too much?
Well, if you're an earnings or a Social Security geek like me, you can actually calculate it by hand. You can go on to ssa.gov and download your earnings history, so that if you're and double check your earnings history, because if your earnings history is off, then your payment is going to be off. It's based on your earnings history, and you can get that right off of ssa.gov. You can actually get a more detailed version if you actually send them a request, but you should have what you need on there. I was online the other day just looking at some historical information for a video. I was actually shocked at some of the jobs that I had when I was 18, 19 years old. They're on there, and they, back in the day, how little we got paid back then. So check your earnings history. That's probably the best place to start. Make sure it looks accurate. And if you want to actually calculate it, just check out one of my videos on how to calculate your own Social Security payment. There's at least 2 or 3 in the library of 450 plus videos that we have on the channel.
All right. Sean Dempsey is asking, I'm thinking of retiring next year. I will be 60 at the end of this year. My wife passed away 7 years ago at age 49. Can I claim her Social Security as a survivor benefit for a few years until my full retirement age?
If you haven't remarried, yes, probably. The thing about a survivor benefit, it's quite possibly my favorite benefit in Social Security, and the reason is that the SSA, you feel, if you're claiming Social Security, that you're getting nickel and dimed with everything. Everything gets rounded down. But somebody somewhere made a decision with the survivor benefit, and probably rightly so, that the benefit really needs to round up. What do I mean by that? It is the exception to the rule when it comes to you can claim one benefit and let the other one grow. So, for example, if you claim the survivor benefit and you took that for a few years, your benefit doesn't get haircut because you were claiming the survivor benefit while letting your benefit grow. It's not like dual entitlement that we talked about earlier. And so more than likely you can. I don't know your specific situation, but there are a few basic hurdles, and most people, the vast majority of people qualify for, they overcome. They're not big hurdles, but it's probable, unless you've remarried, that you can claim the survivor benefit, take that now, and let your benefit grow.
All right. What is the email to submit questions?
The email is livestream@holyschmidt.com. It's one word, LIVESTREAM @holyschmidt.com. And actually, that brings up a good point. We have our very frequent guest is Ari Parker, and he is the co-founder of Chapter. Chapter is one of only 3 affiliates we have on the channel, and they're a Medicare company. They're a Medicare Advisor, and you can see their phone number down in the lower left-hand corner. If you have questions about Medicare, give them a call, 440-703-1214. But and they have wonderful people working there. They'll answer all of your questions. They're excellent at what they do. The reason I'm telling you that, of course, is we want to promote companies that we believe in and we sponsor on the channel. But Ari himself has a book called "It's Not That Complicated," and the book is we've been holding off giving people the digital copy because the 2026 version was just released. And so for those of you that have emailed in the request, and the request is livestream@holyschmidt.com, for those of you who have emailed in a request for Ari's book, it's going to go out in the next few days. It's totally free. There's no catch whatsoever. If you want a copy of Ari's book, then send a note to livestream@holyschmidt.com, and we will hit reply with a digital copy of his book. It's excellent. I highly recommend it. I've read it 5 or 6 times. It's one of the best books on Medicare out there. And if you have questions that you want to submit, then just send them to livestream@holyschmidt.com.
Okay, great. All right, we are 10 minutes, but we've got lots more questions, so I'm going to keep going. Jerry is asking an emailed question. If a spouse files early for her own benefit, is the later spousal top-off reduced too, or can she still reach the full 50% at her full retirement age?
So there's 2 different questions. The top-off itself isn't reduced, but it's a top-off, and the earlier amount was claimed early, and so that stops growing. So it's unlikely that you'll get to 50%. Each situation is going to be different, but the video that I have in the description, that's the one that answers your question in full, and it will take you step by step through the math. And so when you're done here, don't forget, don't leave us yet, but go to the description and click on the video that I told you that had that information on there. Again, the name of the video, or the name of the link, is Dual Income Households, and there's a link right there. Just click on it, and it'll take you right to the video that explains all of this.
Okay, we are getting a few questions in on disability, and tonight's show is strictly Social Security, so we cannot take disability questions tonight. There's 2 that do mix into Social Security. You might want to just email those in to livestream@holyschmidt.com, and Jeff can get back to you on those.
And if you do email them, and we do try to get back to you as quickly as possible. There are some that are, frankly, deeply personal, which we would not share on the live stream anyway. So if there's a question we see in there that is something that we think you need an answer to, but it's one that it exposes you, that we won't answer it here. But send the question into livestream@holyschmidt.com, and we'll do our best to get back to you as quickly as possible.
All right. Mike Winters is asking, when the IRS settles with you, claimed $55,000, settled for $28,000, taken out of county sale of home, does the IRS pay any of that into a person's Social Security?
I don't know. I doubt it. I think claims against you regarding IRS claims are probably separate. This is something you definitely need to talk to a tax attorney about. And my suspicion would be it's unlikely, but I don't know for sure. We'd have to look at your specific situation. There's an answer. I just don't have it in front of me because this is such a unique question. And I definitely don't want to give you the wrong answer on this one. It's not one that is covered in Social Security school. So if you want to send that to me by email, livestream@holyschmidt.com, I'll check it out and I'll get back to you on an email.
All right, great. So Jason is saying, thanks, Jeff. Your show is the best YouTube channel. Kudos to your daughter for urging you to make this channel.
Thank you.
Yes. All right. Ventana Vic is asking, Jeff, why does the Social Security online calculator show a huge increase, $900, if I set my retirement age estimate to 68 years, 4 months versus 68 years, 0 months? It seems strange for it to increase that much.
There's something that's going on in the background. It's probably drawing information from it's probably drawing information from a source that isn't completely accurate. The only difference really should be at 68, it should be 0.2% per month increase in the size of your Social Security payment. So to go from 68 to 68 in 4 months, that's 8/3 of a payment. So that's 2.5%. Is that 2.5%? 8/3? 2.2%, something like that.
Okay.
8/3. 8/3.
Oh, excuse me. C Probe Captain is asking, what are your thoughts on suspending my benefits at full retirement age until 70? I had to file early due to personal circumstances, but considering suspending to increase my future benefits.
Sure, it's not a bad idea. It depends on your specific situation, but one of the things about Social Security is that from age 67 onward, or full retirement age onward, you can suspend your benefits and let them grow again. Now, they don't grow on you don't get a growth on 100%. So if you claimed at 62 and you took 70%, then when you reach full retirement age and it grows at 8% per year, it's 8% on the 70%. It's not 8% on the 100%. So it's important to note that it's a smaller growth amount, but a lot of people do it, and they do it because they want to have a bigger payment and they don't need the funds. And so if that's your situation, it's definitely something to consider, and you might want to talk to a professional about it. And this is something that a lot of people do it, and it's actually pretty common.
All right. Scott is asking, does the 2025 COLA increase apply to someone who has not yet started collecting Social Security and won't claim benefits for several more years?
If you qualify for Social Security, but you haven't started taking Social Security yet, it is in addition to what you would receive, yes. So if you, for example, if you go from 70 to 75, from 62 to 63, your Social Security payment is scheduled to increase if your full retirement age is age 67, which most people who haven't claimed yet it is, would increase from 70 to 75% plus the COLA adjustment, the unclaimed COLA adjustment. Where it doesn't apply is if you haven't reached age 62 yet, and that's because there are different indexing methodologies. Your prior earnings are indexed using a different index than your future payout. And so it depends on how old you are, but if you are at 62 and you're waiting to claim till 65 or 66 or 67 or 70, you do get the COLA increase added to your scheduled increases as well. So it actually ends up being pretty sizable for most people, for a lot of people anyway.
All right. Charles had asked a question that you've already answered, which was, how do I apply for divorce spousal benefits based on my ex-spouse's record? Can I complete the entire process online or speak to someone from Social Security directly? And just had a follow-up of, thank you for your answer, but what should I say to Social Security so that they know what I'm trying to do?
Tell them the truth. Give them the name of your ex-spouse. It's not even a question. You don't need to be shy on this one. I think of over 50% of the population is divorced. I don't know if that stat is still true today. I read it somewhere. Just when you talk to the person in the SSA, say, I want to know about the divorced spouse benefit. And there's a weird line here because they have to tell you what the amount is that you would qualify for, but they can't tell you what your ex-spouse actually is receiving. But you can actually do the math yourself. They'll give you your number. They won't give you your ex-partner's number. But just tell them what you want.
All right. Let's try to squeeze in one last one. It's 8 o'clock. John is asking, I turned 70 in October and want to receive my full maximum Social Security. When should I apply to make sure I receive the full amount without missing any payments?
4 months before you turn age 70. And that's the maximum amount of time you can apply before you can claim Social Security, and that'll do the trick.
All right, great. So we are at the top of the hour. We went through a lot of questions. Anything that wasn't answered, we will put that on for next week's show. And we will always be here live with you on Tuesday nights for talking about Social Security or Social Security and Medicare. I know some have mentioned in the chat box that there was another show that does talk about a similar same topic on at the same time. And so we do know you have choice, and we thank you for being here with us. And we will always be here.
Thanks for staying up with us, and we appreciate the fact that you've given up your evening to be with us here tonight. Jill, thank you so much for your expert production of this live stream. There's a lot that Jill does in the background that you don't see that gets us ready for this live stream, and what looks effortless here for the hour that we're together is actually quite a bit of work. So Jill, thank you again for all of your great work. Gang, we will talk to you on Tuesday of next week. And in the meantime, questions about, if you have Social Security questions, email them to livestream@socialsecurity.com. Don't forget to talk to our partner if you have Medicare questions at chapter 440-703-1224. And if you want a copy of Ari's book, email the request to livestream@holyschmidt.com. We've got the new digital version now, and we'll send it out to you sometime this week. With that, I think we're done. Take care, everybody, and we'll see you in a week. Bye now.